Good morning, everybody. Welcome to our newest episode of Bulls, Bears, and Breakfast. I hope everybody can hear me well. I can see already some of you guys being online. So it's a Tuesday morning. I believe we have some sort of public holidays actually in major parts of the world. Nonetheless, of course, the markets are not sleeping, and we kind of want to look ahead for this week to see what the markets probably are going to do, how to position ourselves, look at some charts that I deem interesting at the moment. We can also, of course, later on look at some charts that you have questions about. So don't be shy if you have any questions to reach out here to me, ask a question if you're watching a recording of this. Obviously, you can also leave your question underneath the video. Also remember to leave us a like and subscribe to the channel. Yeah, and let's jump into the action here. Not so much actually has been happening since last week. If you saw last week's episode of Bulls, Bears, and Breakfast, I was talking a lot there about this very low volatility phase we are currently seeing here on the cryptocurrency markets, especially. We had some sort of breakout, or actually it was a failed breakout, I have to say, here in Bitcoin to the north when we tried to cross this Bollinger Band here that was due last week, of course, due to PayPal announcing that they would launch their own stablecoin. I said last week, it's kind of like, what it takes at the moment. The market is kind of waiting for either a positive, very positive news or very negative news in order to break out of this very boring pattern we are seeing here at the moment. You can see since then the Bollinger Band, so that's the green line up here and the red line down here, they have contracted even more. And I said also, every time you see something like this contraction, sooner or later, you are going to have a very violent breakout, either to the north or to the south. Inflation data last week, also better than expected. You guys remember we made some beautiful trades there during the live broadcast of that one as well. Didn't really help the market. So we are kind of still in this boring sideways phase. And the most question I get at the moment, obviously, is like, Dirk, how long is this going to last? When are we going to break out of this? Is this going to last forever now, or are we going to see sooner or later a breakout of this? And of course, the answer here is we are going to see a breakout sooner or later of this. Now, I cannot promise you guys that it's going to be today or tomorrow or next week or 2 days or 2 weeks down the line, but it is going to happen. And I think it's very important to kind of prepare on what to do when this happens. Now, there are, in my opinion, always two things you can do. If you are not so sure, or if you're not biased, let's say it like this, in which direction we are going to break out, you could actually work with so-called stop buy and stop sell orders. So you could, for example, place let's say a stop buy order maybe here at around 32,000 US dollars. So you want to make sure we really break out of this range, break out of this major resistance we have here at 31,000 US dollars. Maybe you could do the same here to the south underneath this 200-day moving average, the line. And that way you would be placed and would be sure to enter the market here with a stop buy, nothing to do with a stop loss. That means stop trading engine, I want to buy here because now I'm sure the volatility breakout is going to the upside. Or stop sell, also nothing to do with a stop loss. Stop trading engine, here I want to sell a market order. And of course, this is possible here when you, for example, simulating this for a buy trade now, go here to stop buy, and then you would enter the stop price here, let's say, I don't know, that 31,500, for example, GTT. And as soon as the market goes over that, you would buy. It's kind of counterintuitive. I know that, I'm aware of that, but this is how you can handle situations like this. Now, since I'm a bit biased, and I've been talking a lot about that, I think this is already the new bull market in the making. It doesn't mean, we cannot go lower, of course, from here. But for me, the most logical trade at the moment and I kind of missed the entry on this one last week, is still here in this area at around about 28,500 US dollars, because you can place a stop loss, let's say here 26,500 US dollars, and you have plenty of room until you reach this resistance here at 31,000 US dollars. So in this low volatility environment, this is actually the trade I would like to enter. And I had some limit orders here already last week. I canceled them because of the inflation data coming out. I didn't want to gain exposure during that, but I can re-enter them now. So I'm going to re-enter here my buy order at 28,500. I'm going to make it the duration of the order GTC, good till canceled. And then I'm going to send the order here. So 3 Bitcoin. I want to buy at 28,500 US dollars. I'm not setting a stop loss, not setting a stop take profit, not a stop loss yet for this. I'm going to do this after this order should it get executed. Later on this week, of course, I'm then going to monitor this order. You can always see me then talking on Telegram about this order. I know I've been a little bit quiet the last days on Telegram. Had some personal things within my family going on that I needed to take care of. But rest assured, I'm going to pick up the pace there, of course, again as well. Let's quickly see here. Who do we have with us here this morning? Sharon, Upper, Hey, GA, GRDYS, Tanny, Hongtu. How are you guys doing? Hongtu already asking here, absolutely, what factors are needed for Bitcoin to reach the 35,000 mark? Well, it's like I said, we need this kind of good news, to really break out. We need something that shakes up the market. And I think what we are seeing here at the moment is very, very typical. And as a trader, it's very frustrating. I'm aware of that. This sentiment, there's this cheat sheet maybe that you have seen before, the Wall Street cheat sheet, I think we are in this, somewhere in this area here between anger, depression, maybe even already disbelief. And because the market is at this point, especially here during depression and disbelief, kind of very typical that you have those prolonged sideways move. And you can see here, so this is a daily chart of Bitcoin. We really have this. We always have this, actually since pretty much, to be honest, since summer last year already, we have this prolonged sideways moves and then a volatility breakout. So this was the one to the downside, obviously, because of FTX. You guys probably still remember, everybody was panicking now. Then again, a sideways move. Then we had a breakout to the north here. Again, a sideways move, breakout to the north, sideways move, breakout to the north. So it's going to be probably the same now. If you ask me, the most typical things that we see is sideways move and then maybe breakout to the north. And the next breakout for sure can then take us to 35,000 US dollars, maybe even higher. I still think around the halving next year, so late April 2024, we should normally, if history repeats itself, be somewhere between 40 and 50,000 US dollars in Bitcoin. That's why I also think, those phases here are pretty good if you're in for the long run, that is at least to accumulate this. So it is, however, the most boring phase of the market. And you can see after this disbelief rally, then, it picks up again. And then we're coming into the cycle of hope, optimism, belief, thrill, euphoria again, which we have gone through really by the clock in every Bitcoin cycle, in every 4-year cycle. So after halving, usually you have like 18 months, a very good bull run, and then we're at this top again, wherever this top will be. If you ask me, somewhere between 100 and 300,000 US dollars probably, and then we are going to drop again. However, I've been talking about this quite a lot, of course, and I do want to concentrate, of course, more on kind of the short-term things out there. Let me quickly switch back here. So short-term really for me here, at least when it comes to Bitcoin, is this area of 28,500 US dollars is a very good one, I think, to have a limit order, if a limit buy order, then one gets executed. You need to have your stop loss probably somewhere around 26,500 US dollars, but you have all the space here up to 31,000 US dollars. Well, then I would consider again taking this swing trade off the market. This is how I'm trying to tackle this low volatility thing. You know, don't force yourself to have a trade every day. Wait really until things start moving. Maybe because it fits very well in here, let's have a look at altcoins as well. I always like to use this altcoin season index. This is published by intothecryptoverse.com, a quant website which I use extensively for my own research. I can highly recommend you guys having a look at it. I'm not affiliated in any way with them, so no advertisement, but it shows you, in this case, the last 90 days, which altcoins have outperformed Bitcoin. And you can see not so many altcoins, which altcoins were negative in comparison of their performance to Bitcoin. And of course, we had here Bitcoin Cash Maker, Stellar, XRP, of course, outperforming, but we are still in a phase where there is more Bitcoin dominance in the market. And I've said this also very often in the past, lots of it having been fulfilled already, that I always wanted, you know, this level of 48 to 50% in Bitcoin dominance we've reached already, because this is always the foundation for a new bull market. When, however, you know, I get it's a little bit boring at the moment, but you know, if we cannot find entries so much in cryptocurrencies, there are of course also other assets that you can also trade on Bitcoin, and one of those I've been watching is of course the US dollar. I do watch it in the form of Euro US dollar. You can, of course, also use the US dollar index here. However, the euro makes up almost 50% of the of the US dollar index. So you might as well also look on euro dollar, because if that one is moving, all the other US dollar pairs are moving as well. And last week I told you, for me, this area here around 109.25, pretty interesting in my opinion. I still think so, although we have closed now below that. So actually my favorite thing to happen here now at the moment would be to see a little bit more of US dollar strength again, maybe going here to this Bollinger Band, the lower one, which is at 108.60, maybe even lower to the 200 days moving average down here at 107.78. And then I would like to see actually a signal there from my sniper signal generator, because you can see here on my danger zones indicator, which kind of shows you how hot the market has run already. So you very often look at this bright red zone here, for example. This is when euro dollar went into overdrive. So this is kind of like where I start looking, in this case, then for short entries. If I would see a bright green here, which we haven't, so quite long ago here, the last bright greens we saw actually down here at 0.95, I would then look for long entries. And my preferred trade here at the moment actually would be to see euro dollar going down here to this 200 days moving average, minimum the lower Bollinger Band, having here a bright green danger zone area, so which indicates like, okay, there has been too much downward momentum already, and maybe then get from my sniper signal generator a nice long alert. So that would be the perfect setup. However, it could be a not so bad trade actually here also to buy a little position, because you can see we have been struggling along this here already. I would prefer still if we would be above this yellow line, which is the 100 days moving average. But yeah, if you want to go long here, you should be ready to exit once we drop below this Bollinger Band here. Not a trade I would take at the moment. If you want to do that, okay, because there's a fair share of upwards potential you have, them could go all the way up here to 111 in my opinion. But I still like to wait for a better setup here, because in my opinion, from my experience, trading is not about, you know, clickety-click action and finding immediately the trades, but to be patient until you find the perfect setup. So I would be patient here. I know a lot of you guys kind of feel like they should take the trade. Third chart I want to talk about today is gold. pretty interesting in my opinion. You guys know I'm not a major fan of gold, really. I don't usually trade gold so much. And if I trade gold, I like to trade it more on the short. I like to trade it more on short positions. I said a couple of weeks ago, this area, everything above 2,000 US dollars for me is a clear sell. However, we've quite seen a lot of downward pressure here in gold already without much resistance to gold has been actually falling here from almost 1,190 US dollars to now around about 1,900, and we are now in this area of a 200 days moving average. And despite us being here not in the bright green area of the danger zones indicator, of my danger zones indicator, this is actually a trade I would take, because I could believe that we very easy could bounce off here and go at least here to this 50-day moving average, which currently sits at 1,939. So this is something I actually would like to do, and I want to do. It's not a trade I want to do a crazy amount of positioning in. So where do we have gold? Down here, gold, and so maybe I would go there for 10 contracts, buy the market here at the moment, send order, here we go. And my stop loss, I actually can put down here. So if we really fall down here, let's say to 1,885, I think we're going to continue lower. So that would be my stop loss here in this case, 1,885. Just a little position because I think there's a high chance we are bouncing off here first, so we can maybe gain on the in a long position a couple of dollars here. However, if we really go up here, maybe to this area of 1,939, where this 50 days moving average is, you should at least put your stop loss to break even again, that you don't lose money anymore. Anyway, small position for this account at least. If it goes down, we're not going to lose terrible amounts of money as well. That's about the only thing really at the moment that I see. Like if maybe we can also look here quickly at the S&P 500 again. And you see last time we had a pretty good signal here from the sniper signal generator at around about 4,580. However, we are also there a little bit in no man's land. I said last week, for me, in order to do a swing trade here at the moment, again, I would like to either see the S&P 500 drop all the way down here to 4,315, or go up again into this area between 4,580 and 4,600. What can trigger this? Let's have a look at the data we're expecting this week. So tomorrow we are going to see building permits. I'm just going to look now at US data, obviously, because that is the one really influencing the markets at the moment. We've seen that with European data, for example, be it interest rate decisions, be it EU inflation data coming out. It doesn't really move the markets that much. For sure, interesting, of course, is going to be tomorrow night at 8 p.m. CET, the FOMC minutes. The market is going to eye this, obviously, on how the outlook for an interest rate hike again is going to be. I like to always have a look here at this CME Fed Watch tool, which tracks the opinion of market participants whether or not there's going to be an interest rate hike in September again. So a month from here, 20th of September, we're going to have the next interest rate decision. At the moment, and this is the picture we've seen for the last couple of weeks, actually, 88.5% of market participants believe we're not going to see another interest rate hike in September, which of course would be good for the market. This would be good for risk on assets. A first glimpse on whether or not this is going to become true, we are for sure getting here tomorrow night at 8 p.m. So at 6 p.m. UTC time. I'm sitting in Germany, in Berlin here. So for me, CET time. So this is going to be, of course, important. other than that, this week we are not really having this much of important data. So probably if we are going to see a little bit of volatility picking up on the markets, it's going to be tomorrow night. I hope the Fed is kind of, picking a language that lets us look into their doings a bit better, because Jerome Powell kind of liked to be a little bit vague on what the Fed wants to do. However, so what we can expect in all honesty is probably, if we don't hear like very out of the ordinary things there tomorrow from the Fed, that at least for this week, the sideways range is continuing. However, you could see, like, I entered a limit order. I built up a little position here in gold as well, which is a little gamble position. By the way, just because I do that, of course, doesn't mean you need to follow me. Please do your own research. This is, of course, no financial advice. The more important trade for me would be the Bitcoin trade, where I entered this limit buy order at 28,500 US dollars. Let's see how this one is progressing. Let's quickly look, because in my opinion, this is kind of everything really that is like, that I deem really important short term for the markets. Let's see if we have some. Yeah, I mean, you guys are kind of also highlighting what I just said. I mean, it looks always impossible at the moment. From this standpoint right now, with this low volatility we're seeing on the market, of course, it looks kind of impossible that Bitcoin could ever go to 35,000 US dollars. However, we have had plenty of those phases also in the past. And remember also, it's not that long ago, like end of December, when everybody was still depressed, when let me zoom here a little bit in, when we saw also this extended sideways range where really nothing was really happening for in this case just 1.5 months, and then suddenly we went up here from 16,000 all the way to almost 24,000 US dollars on the top. So a performance here of, what was it, like 60-70% out of nowhere, really. And I'm pretty sure sooner or later we're going to see something like this again. I don't know yet if it's immediately going to be to the upside, or if we are first going to see a massive downswing again. I'm a little bit biased, as you heard just now, to the upside. But what seems impossible now will for sure then, in a hindsight, then look possible again. Question here again from Kwang Kai. I hope I'm pronouncing that correctly. Inflation has increased again. Fed will think about its interest rate, so it's difficult for BTC to reach 35K. How do you rest? I don't understand that question, sorry. Yeah, interest rate was a little bit higher. You are absolutely correct, than expected last week. Not than expected, than the last reading. The June reading was at 3%. July reading was at 3.1 or 3.2%. I don't remember. And so a little bit higher, but still lower than expected. And this is okay. It's never a straight line going down. The important thing is inflation is getting lower. And if inflation gets lower, and this is the message I want to end today's stream with, it's the same message I've been transporting now for a year already. Inflation is coming down from high levels. This is the low of risk on markets, stock markets, and crypto markets. That was last year in October. Of course, we had a plunge still in the Bitcoin due to FTX in November. It's still a good environment, in my opinion, to slowly, long-term build up risk on positions in stocks, in cryptocurrencies again, because by the looks of it, at the moment, it looks like the halving next year, April, is going to be also the time where the Fed is slowly going to lower interest rates again, because it's so crazy, And now I remember I wanted to show you this already as well. It's a bit crazy. At the moment, you can see here, 1 trillion US dollars per year are paid in interest on US debt at the moment. And this is half of all income tax collected in the USA. This is crazy. Now imagine interest rate would be even higher. They don't have any choice than, then the money printer going into overflow. But this is also something here saying with a mortgage trade. I want to do actually a video special on this also next week, because in my opinion, this is really something that still could be kind of shaking us up by the end of this year, where probably everybody wants to panic sell again, and actually it will be a good time probably to buy. But more on that next week, end of next week probably, on the video then. And I want to close with this. I saw this morning Michael Burry, the stock tracker. So Michael Burry, the guy from The Big Short, in 2008, that made a lot of money by forecasting that the American real estate market is going to collapse, became very famous, and he's out there again buying puts on stock markets like crazy. So he said, like, I bought like 890 million of SPY puts, so on the S&P 500, 740 million US dollars of Nasdaq 100 puts, and this makes up 93% of his portfolio. And this is very misleading in my opinion, because it seems like, oh, this guy has like, what is that, like 1.5 billion or 1.7 billion in money that he's managing, and he's like going all in because he thinks markets are falling. And if a guy who forecasted the real estate crisis and made a lot of money back then forecast this, he for sure has to be right. This is very, very misleading, because what is happening here, he is buying options. And this gentleman here, Dylan Leclerc, who I also absolutely love following on Twitter, or X as it is named now, made a very good example for this. He said, like, I can buy 10,000, 3,900, 390 SSP puts expiring this Friday. So in 3 days from now, or 3.5 days from now, and each one costs 2 cents for 200 US dollars. And that would give him 448 million US dollars of notional exposure. So, and this is the thing here, because this is not actually that he invested here 1.6 billion US dollars. He did this with option, probably invested for sure a couple of million US dollars, but it's very misleading, because it's kind of sold or transported on social media like, oh, this guy is going all in, short on stocks. Probably short on cryptocurrencies also. That means the market has to crash. So if you read things like this is why I showed you this now. Be a little bit careful, try to question, okay, what is really going on there? And one of the accounts that does that on Twitter or X is this gentleman here, Dylan Leclerc. Highly recommended to give him a follow there. Of course, if you want to give us a like as well, it would be very much appreciated. And also check out in the description of this video the link to the Telegram channel, where I always update you on the position, should especially the Bitcoin position be executed. I'm going to pick up the pace a little bit also, and write more about the economy. As I said, I was a little bit on a time budget these last days. Yeah, if you have any questions, of course, you can reach out to me on Telegram as well. You'll find my personal ID there as well in the Academy group. Of course, you can also write us an email the classic way, academy@primexbt.com. And yeah, let me close with the sentence I always say: happy investing, and always remember to use a stop loss. Going to see you very soon again.